I'm John Hanna for CDTV.net in New York, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Hey, Greg.
Good day to you, John, and happy Thanksgiving to you and all your listeners out there. Hope you have a great week.
That's true. Yeah, that's this week. It's happy Thanksgiving to you and your family as well, and thanks for joining us today. So, Greg, tell us about the market week heading towards the Thanksgiving holiday that we're going to have this week.
Well, if we take a look at last week, John, all's well that ends well. We had a midweek roller coaster ride. A lot of that was concerns over the stability of the Irish financial system and the fears of a tighter monetary policy in China. And the domestic equity indexes ended the week where they began. And despite the Fed's efforts to keep long-term interest rates low, we had the 10-year yield rose for the second week since they started their launch of QE2. So right now, the markets are up about 7% on the Dow year to date. NASDAQ under 11% briefly, and then also the S&P right at around 7% for year to date. And this morning, being Monday, the markets are selling off, but down. Dow's been down around 130 or so points as we're speaking. But we got a lot last week. We just had some pressure from the European Union. Ireland finally said it would accept roughly 110 billion in loans from the EU and the IMF. They're trying to stabilize its banking and financial system. And then inflation was pretty benign. CPI came out basically flat for the third month in a row if you take out food and energy prices. And overall, energy prices were up about 2.6, while gas was even higher by 4.6%. And so we had wholesale prices, even considered a harbinger of consumer inflation to come, also was pretty stable, rising only 0.4% in October. And most of that was because of the increase in energy cost. China is, wanting to tighten things up over in their markets. The Central Bank of China continued to tighten availability of credit by raising the reserve requirements for banks for the fifth time this year. Because they're trying to curb their inflation, John. It was 4.4% in October. So things have been pretty hot over in China, and they're trying to curtail that somewhat. Don't know if they'll be able to, but China's experienced just some incredible growth over the last year or so. But kind of focusing back over here in the U.S., housing starts plunged 11.7% in October. That's the single biggest factor, was a 43% drop in the volatile multifamily construction number. So housing starts, are kind of weak as we, you get these spots, John, where you have, the economy, you have a little bit of good news, and the housing has been, still kind of that weak factor. Then you had General Motors, the initial public offering last week. The U.S. Treasury, was hoping to unwind its share of the government Motors shares, and that option went really nice as far as the initial public offering. We had auto sales that perked up 1.2% during October, and were up 7.3% from last year, October. And then, of course, we're talking more about the banks and the stress tests that they're going through. There's 19 banks that underwent stress tests last year to determine, vulnerability to an economic downturn. They're going to be required to do so again before they can increase dividends or buy back stock. So the Federal Reserve said the test will take into account their ability to absorb any losses from being forced to repurchase faulty mortgages that it sold. So that will be interesting to keep an eye on that, on this stress test that the banks are going to go through. As we look ahead, we've got a shortened week by Thanksgiving, and early into trading on Friday. We'll likely focus on Tuesday's revised third quarter economic growth number and in the continuing Euro drama that's unfolding. So really, we look ahead. We've got the GDP increase. This will be on Tuesday at 8:30. We had the increase minimally in the third quarter, 2%, which is still way below the average GDP growth rate of 3.31. Then we have home sales will be coming out on Wednesday. The foreclosure scandal might, be putting some pressure on the real estate. So existing home sales are due out on Tuesday. And then the FOMC meeting minutes, despite criticism, the Federal Reserve is sticking to its QE2 plans to buy $600 billion in treasuries. And, since that's been announced, the unintended consequence has been faster rising rates as far as interest rates on the 10-year, and possibly faster rise in inflation than the market expects. So we'll be watching for the Fed minutes on inflation and growth on Tuesday at 2 p.m. Then we have durable good orders. Holiday season is kicking off, and economists will be keeping an eye on orders for durable goods. And this is going to be coming out on Wednesday at 8:30 a.m. And then lastly, we have jobless claims, which will be Wednesday at 8:30 a.m. And benefits, as far as jobless benefits, rose slightly last week, new claims, but economists are still optimistic that the trend will improve and will hit a 2-year low by year end. So we'll be watching this on Wednesday as well.
That's Greg Womack, president of Womack Investment Advisors, joining us from Edmond, Oklahoma, and I'm John Hanna for CityTV.net in New York City.